All right. Good evening, everybody. Hopefully, everybody's having an excellent day. Wanted to drop in here. Let's talk about what happened on today's price action and get a sense of what could happen tomorrow. So, if you haven't seen it, every single night I am doing a market review for the following day. We've hit every single one of our targets, and yeah, even yesterday's ended up hitting, and I had a wicked day today. Absolutely bonkers of a day. I can't even put into words how good of a day today was. So um, yeah, I think that there's certainly some room for improvement, of course, but for the most part, just had a fantastic day. And then let's head into the charts and take a look at what's going on here. So on the weekly, we see that our weekly candle here, we opened, had a high, went all the way down, have bounced from that monthly premium BISI high, buy side imbalance high for those that are coming here new, and now have gone pretty much till equilibrium, a little bit below during the Asia session. We've dropped down about 40 points. So very interesting price action too today though. So let's go down into the hourly. We see that, and we kind of expected this to drop down towards this and maybe bounce here, given how much liquidity was sitting right in this whole area here. But we do see that at the end of the week, and actually tomorrow is the end of the month as well. So it's going to be important actually to start at the monthly, because we're going to have a new month coming up next at the end of Friday's close. So either way you see this, what you have on the monthly is a bearish order block here. And you've also got monthly imbalances to the downside. Now you have a pretty big monthly one down here. This is the simplest area of liquidity that I would expect. Now, considering that the following months are technically seasonally bullish, if we start to see this go down, we're going to see this go down quite a bit, and well into, I think that we can head well into discount, because there's actually a 3-month imbalance, a quarterly imbalance down here near equilibrium that I think we're going to head down towards. So what does that mean? That means a solid 1,300 points on NASDAQ still. That's what I'm thinking. If it can get down there, maybe like maybe like 12 or 11, 100 handles. But I think it's going to go down there if we see some confirmation here. So let's see, let's see what goes on. Let's go down to the daily, take a look at the day in relation to what occurred. Okay, so this was the day on today. We see that we have this bearish order block here, and we wanted to see it close below here. This wick is fine, it's acceptable, but we wanted it close below this bearish order block. So with this bearish order block, I expect us to continue back downwards. I don't think that the signature for price action would take above these, but look at one thing here. So I see these as kind of a relative equal highs. So I wouldn't be surprised if we jutted up back into this one more time, and then hit that old new week opening gap, and then went downwards again to tackle this short-term low on the daily. We've certainly created a bit of a breaker here. We see a low. Let's see. Let's more like a mitigation block, really. We see price traded up to down to there, went below it, went back up to it, immediately dropped down, and is now kind of in this in-between area. Bearish order block, down, another bearish order block. I'd like to see these completely blasted through. So tomorrow we have CorePCE at 8:30 a.m. and then revised UoM consumer sentiment 10 o'clock a.m. We typically look for a 20 or 30% retracement on the week, but since the week's already retraced, I think that that's going to be a very, very nimble kind of Friday. You're going to need to be looking for really key areas of liquidity for it to bounce around in. I don't know if we're going to have a range day on Friday. Typically, this signature where we have a price go up on Monday, down Tuesday, further down on Wednesday, creating potentially low of the week, and then back up Thursday. I mean, I could see this going back up to this relative equal high, taking that, and then figuring out what to do from there. So let's go down to an hourly, because there's some really important stuff that I didn't get to walk you through this morning, but I did. If you were watching, I put all these levels that are on here for the most part, except for this one here. We're on the chart already. So what happened today? So we can see from Monday, we had a relative equal high up there, or sorry, not relative, a short-term high up there. We dropped, created another short-term high before this drop, and noted that there was, and I can probably delete this small blue line if I can get there. All right, whatever. We noted that this was liquidity high. Go back to the morning session of today, and I noted that this liquidity high is there. We also have this area of liquidity, that one, and then I noted that there's this area of liquidity down here, which we might tackle, as well as this one down here. Actually, I think I might have just had this one, and then later on in the morning, as things started to play out, I put these as well. The real-time hour range here, we can kind of see that at open we blasted through it, came back down, come back through it, and then moved onwards and upwards through that thing. So the signature here is that we created a lower low. We didn't create with this one, we created a market structure shift. And so now we see it returns down to here, returns down to this bullish order block, and then continues upwards. So that was the signature for today. I profited really nicely off of this run. But I also got spanked on a couple of things because I couldn't manage a trade later on in the day. So let's go down to a 15-minute chart now, and then we're going to take a look and see what occurred, what you should have been looking for in the 15-minute. So, okay, so here's your day. This one over here, here's your day, right? You probably woke up, this is Asia, this is London, so 3, 4, 5 a.m., and then now you get over to the 6 a.m., 7 a.m. You might have been awake for this, but what was interesting about this price range here was that we had marked this short-term high right there, and it hits right at 8:45 a.m. It does go for this short-term liquidity there, but what it doesn't do, let me pull this over. So what it doesn't do is go for these really deep lows here. It does end up retracing to that point, taking out some sell-side liquidity that formed in the market before open. So it went down, takes that, and continues upwards. Doesn't quite get there, tries to fake a few more people out, but then proceeds to run up higher. This liquidity being taken here was kind of key. There's a shift in market direction where it has a turtle soup, it takes stops, and then it starts to run, aiming for the other area of liquidity, which would be these relative equal highs formed before the market started. So that's what you would have been aiming for. You would have had to sit through a pretty gnarly retracement there if you held it for the whole time. We're going to look at the lower time frames to see if there's some signatures that you could have keyed off of in order to hold your trade a little bit longer. So let's go down to the 5-minute. Okay, so here's the 5-minute. Let's see. So this, remember, this is the morning here. So this is all you see in the morning, right? I'm going to zoom out a little bit so you see a little bit more. So same deal. This formed in London, just after London, this low. And then this low forms right in the middle of that. It right at 8:40, 8:30. There's a touch right there, and then it just rockets down 15, 20 minutes tops. And you have 14,780 down to 14,680. So that's a pretty good trade there. I mean, if you're awake for that, if you're ready for that, you've had to take a kind of a riskier play because there's a little bit of liquidity above and below. So today, and I mentioned that during this morning's call or this morning's market preview, there's liquidity above and below, so there's equally viable targets that you can take. But once this took this sell side liquidity here, you kind of see it's very wicky, lots of wicks here, right? So lots of wicks there before it continues forward. And it comes down for this 5-minute fair value gap. And right at the beginning of the 10 a.m. ICT silver bullet. So you could have gotten in at 14,724. You would have had to weather 14,730, so about less than 10 points of heat there. Here you would have gotten stopped out for sure though, right? So that is always the tricky part, is you would have had to be nimble here and taking your 10, 15, 20 points of profit before it then ended up going all the way down back to that bullish order block and volume imbalance down here. So always try to mark out those volume imbalances because it's a gap. It's basically a gap where price has not traded through and come back to it yet. So I think that having that on your charts would have saved you, because then you could set an entry here if you were bullish and then continue forward, right? Here at the top, this was at about 12:30. So we see at 12:50 fair value gap forms. Price never gets back up to it until later. And even then it doesn't get up to it. So kind of difficult on the 5-minute. You would have gotten stopped out on this fair value gap if you weren't very nimble. And this would have gone down to spike everyone else out. Let's look on the 1-minute to see if there's any possible entries in those areas. Okay. So we'll go, this is the morning, London. See that low formed here. Okay, so after going back up to that area of liquidity at 8:30 a.m. this morning, when we had unemployment claims and final GDP come out, this was really miserable to try to think through, because look at all that consolidation. That's all we saw before it ran upwards, right? And then once it went upwards, I think that was this here, this shift right here, where it was a low, high, higher low, lower high, so consolidation still, and then this drop beneath was your turtle soup entry. Yes, it does retrace down to this fair value gap, but a fair value gap forms after the opening range, towards the end of the opening range, and determines, hey, like this is where we want to start. So you might have had a, let's see, the lowest here would have been 14,656.25. That was the high actually. And the lows here would have been 14,673, 14,671.75. So not a lot of drawdown there for an entry, but that's what you would have had to look for and feel confident taking. I was not confident to take that one, so I did not take that one. I mean, then this rides all the way back up to almost target and then starts to trade below. So what this does is now trades back down to that imbalance here. And then from that point onwards, you can mark these out as well. I would highly recommend you do the same. Oh, that's the wrong one. This was the silver bullet. So you can see how price pretty much respected that. I think that that would have been an excellent spot to continue upwards, given the day was already looking that way. And of course, you can see that that continued on for quite some time. Here, what's interesting is that we actually have a drop form here. There's no, within the 1 minute, there's no short-term low that got created there, so you can't really like say it moved, but there is a fair value gap, and if you were looking, you could have taken that one for sure. But if not, here's this, you know, shift below market. You've got your return to fair value gap, and then you continue downwards all the way until this afternoon silver bullet. So so it hits this low. That blue line, remember, is a real-time hour high. It hits that low, which means it's trying to mitigate all those longs, all those people short at that level who got kind of like waxed. They are getting ready to get out. So you see the markets end up not staying there terribly long. They end up getting out, and then rebalancing upwards, and then kind of just dawdling into the afternoon. So I think that what could happen tomorrow, let's take a look at the 4-hour chart actually. So 4-hour chart still indeed bearish. Created that lower low there. It moves and continues upwards, comes back down. Now we have an even lower low with a change in price signature where we see the 2 4-hour candles essentially are just outdoing themselves down here. So I would like to see this either retrace back down into this fair value gap before continuing further upwards, taking out some of these areas of liquidity. I think would be good. It is Friday though, so I would be curious if we can get above this fair value gap. Then it's probably, or this new week opening gap area, it's probably possible for it to do that and then some. We'll be watching this consequent encroachment as well. Hopefully it doesn't invest a crazy amount of time. Hopefully you don't have to invest a crazy amount of time, and it will not spend a crazy amount of time up in that area. So yeah, I mean, and then of course we have that daily discount SIBI, SIBI high. It was a discount when it was in this dealing range. Oops. This, yeah, there we go. So now it's in this range, and what that means is we would potentially still see, this is a discount here from high to low, but from a low to high perspective, if this continues upwards, we're for sure going to take a look at that. And yeah, I think that's it. I mean, we anticipate stuff continuing, come down to here maybe, and then bounce, or come take these and then come back down. Not easy to predict on a Friday. So again, stay nimble. Hopefully, if you have any questions on prop firms or the Apex Trading Fund, I'm gonna be hopefully finishing up those within a week or so, and passing a whole bunch more of those. So with that, we've talked about what happened today. We've talked about what happens maybe tomorrow. Let me see if there's any questions here. No questions yet. So anyways, I think I'll just cut it short then. Thank you so much for listening. I appreciate your time. Hopefully this can help you get a sense of what I'm looking for on the higher time frames, and then help you kind of like hone into those things in those areas. And over time, you can kind of see, you'll be able to see why those areas are important. It's taken me a lot of time to understand that, but over time you'll understand that too. So with that, I'm going to close out. Again, thank you for the subscriptions. We're up to 77 now, which blows my mind. Like, I didn't think that I thought people would be super bored with this, but again, I hope you can come back and just watch price action. I will leave the multiple different time frames on the screen as always during those calls. And yeah, I hopefully this can just provide a little bit of value. I know I'm going to be reviewing it for the days that I couldn't trade. I'll be reviewing those. I'll be reviewing days that I was able to trade, reviewing those, and all of that is allowed by YouTube. So thank you very much. I appreciate this forum and hope to continue to do this for you. Have a good night. Get some good rest. Be careful tomorrow with the CorePCE at 8:30 and the UoM consumer sentiment as well. Okay, so I think with that, I'm going to bid you adieu. Have a great evening. Get some rest. Drink some water, and I will talk with you tomorrow morning. Peace.